If you've got a tax refund coming and you're wondering, what's the smartest way to use my tax refund? Or if you've got any chunk of money coming to you, you are going to love this video. Most people in the United States file their taxes in April, and 75% of everyone who files taxes gets a refund, with the average refund amount being about $2,800. Yay, free money! If you like free money, please go ahead and tap the like button on this video. But wait a sec. It's not exactly free money, is it? I mean, a lot of people tend to treat a tax refund as free money or bonus money, but actually it's your money. It always has been your money, and it should be treated like that. Because in order for you to get a refund, that means that you've paid more money in estimated taxes than you ended up owing, right? So basically, a lot of people use tax withholding as a forced savings plan and give the government an interest-free loan for the year, when they could have been earning interest on that money themselves. If the average tax refund is $2,800, that works out to $233 a month that you're automatically putting into this forced savings plan. If you invested that $233 a month for 12 months in a high yield savings account or money market account at 0.5%, you'd have $7.58 in interest at the end of the year. Okay, that's not a ton of money. But if you found that laying on the ground, you'd be happy. You wouldn't stick it in an envelope and send it to the IRS. That's $7.58 that you could use to treat yourself and a friend to coffee, or a little extra that you could invest for the future. If you invested $233 a month for 12 months on a cryptocurrency exchange like BlockFi, link in the description, at 8%, you'd have $124.17 in interest at the end of the year. If you invested $233 a month in a price-linked savings account like Yada Savings, I'll put the link in the description for that one too, then every week you'd also have the opportunity to win up to $10 million. And we're just talking about the average overpayment amount. What if you could adjust your withholding or estimated tax payments down a bit further without penalty to earn more interest over the course of the year, and then pay the remaining taxes when they're actually due? And then what if you set up an auto transfer to an account that pays you interest instead of to the IRS? If you don't trust yourself to have the discipline to do that, and you would rather use the IRS for accountability to force you to save, that is totally okay. The important thing is to realize that either way, this is your money. Dollars, euros, pounds, Bitcoin. These are all what are called fungible assets, which means that one can be exchanged for another. So when you receive a chunk of money, like a tax refund, you might be tempted to treat it differently than the income you receive monthly from your job or business. But it's the same money. This came from your income. So you want to allocate your tax refund to your same financial plan. Depending on where you are in your financial freedom journey, you'll allocate that money differently. At my Financial Freedom 101 event, I share the path to prosperity, which gives you a roadmap of the 8 milestones on your financial freedom journey. It's very similar to Dave Ramsey's baby steps, if you're familiar with those. If you'd like to check out that event, you can get tickets on my website for $497, as long as we still have space. Or better yet, you can use this magic link, financialfreedom101online.com, that lets you come for only a $97 seat deposit, which you get back after the event. So this really is a full scholarship. So first of all, if you're not cash flow positive right now, meaning you're not bringing in enough money to cover your basic bills and expenses, then you'll probably need the money from your tax refund to help you survive until you can get your income up, right? If you are cash flow positive, but you don't have a separate reserve account, consider starting one with up to $1,000. Some people call this an emergency fund, contingency fund, or rainy day account. Being a follower of the law of attraction, I prefer the term reserve account. The purpose of this account is to create a cushion between you and life's unexpected curveballs, whether your heating goes out in the middle of winter or you have to go to the doctor. This account is your safety net. It creates a feeling of stability because what could be a major financial setback becomes more of a minor inconvenience. So you could even call it your stability account. Without a reserve account, if you have an unexpected expense that you can't afford, then you're likely to borrow the money or sell off investments. So this account is kind of like an insurance policy that keeps you out of consumer debt and protects your investments. Now, $1,000 is not ultimately enough, but it's a start. And even a $1,000 buffer can be life-changing. So after that, if you have any high interest rate consumer debt, you might want to consider applying some or all of your tax refund to getting rid of that. I like Dave Ramsey's debt snowball method, where you list your debts from smallest to largest in terms of how much you owe. And then you make the minimum payments on everything but your smallest debt, pay that one off first, then move on to the next smallest and then the next smallest, and so on. My only warning here is that debt is not a problem. Debt is a symptom. So if you haven't fixed the actual problem, like maybe you're spending more than you make, or maybe you're just not organized and you're not following a specific cash flow plan, if you haven't fixed the actual problem, then the debt will probably just come back. So fix that first. Then the next place to consider allocating your tax refund is towards fully funding your reserve account. Ultimately, I would love for you to have a cash cushion of 3 to 6 months of living expenses. If your income is pretty steady and predictable, you might lean more towards 3 months. If your income is more erratic, you might lean more towards 6 months. Either way, once you're cash flow positive, you don't have any high interest rate consumer debt, and you have a reserve fund, you've laid a firm financial foundation and you're in a great position to build wealth and financial freedom. So if you're at this point in your financial journey, you might want to invest your tax refund to help you reach your financial freedom goals even faster. Basically, you're growing your own golden goose so you can live off the golden eggs. So where should you invest? Okay, I'm not a financial advisor and I don't give financial advice, but my personal hierarchy of where to invest first, second, third goes like this. My first favorite place to invest is any account that'll give you a match, up to the match. Because if you have that option, that's an instant, guaranteed 100% return on your money. Awesome. My next favorite place to invest is into a Roth IRA because it is the easiest way to become a tax-free millionaire. I'll link in the description to my video on how to do that, including a really cool loophole for what to do if you make too much money to contribute to a Roth IRA. If you live in Canada, the nearest equivalent is a TFSA. And if you live in the UK, the nearest equivalent is an ISA that lets you invest in stocks and shares. My next choice is a traditional tax-sheltered retirement account like a traditional IRA or a SEP IRA, where you get a tax deduction on money you put in, it grows tax-free, and then you pay taxes later when you take the money out. After that, for some people, it makes sense to consider getting a health savings account or HSA, which gives you tax breaks for saving and investing specifically for healthcare. So it can kind of become like a bonus retirement account for health and medical expenses. Once you have exhausted all of your tax-sheltered accounts, I think it's a good idea to have a regular brokerage account, which you should be able to open pretty much anywhere in the world. And I think we've reached the point where it makes sense to consider having a small amount of your investment portfolio in cryptocurrency. So you might want to consider opening an account on a cryptocurrency exchange like BlockFi. Again, link in the description. All of these accounts we've talked about, they're not investments in and of themselves. They're just types of accounts. Like a checking account is a type of account that lets you write checks. An investment account is a type of account that lets you invest in stuff. I recommend investing in a strategy first, and then specific investments that make sense for your strategy. What does that mean? A strategy is a clear plan based on real data for protecting and growing your money. Because if you don't have a clear investment strategy, then investing is really scary. I've worked with lots of people who were so scared of losing money that they just kept their money in cash for years and years, which meant that not only was it not growing and working hard for them, they were actually losing money year after year to inflation. Other people decide to hire a financial advisor that they like and trust to help them invest, but they don't really understand what's going on. So there's a low level of anxiety there, whether they realize it or not, around, is this actually going to work? Do I want to wait 30 years to find out? And I've also met multiple people who had their financial advisor that they liked and trusted run off with all their money. That's scary too. Even if their financial advisor is trustworthy and competent and amazing, when clients come to me from the big box financial advisor world, I can typically find 2 to 5% in money leaks in their portfolio that are stealing from and limiting their financial future without them even realizing it. You can tell you have a big box financial advisor if they have you own more than 10 ticker symbols and or rebalance your positions regularly. So it's important to learn how to follow a clear investment strategy. That way you know what's going on with your money. You can tell if you're on track to reach your goals. And if you still want to work with a financial advisor, that's great. You can tell if your financial advisor is actually doing a good job or not. One mistake that a lot of investors make is thinking that telling their financial advisor that they'd like something medium risk or something green and socially responsible is an investment strategy. Now, it's fine and awesome if you only want to invest in green or socially responsible companies or funds as part of your investment criteria. But that's just one criterion, not a strategy. And when investors say that they want something low or medium risk, what they actually mean is that they don't want to see a lot of price volatility because it scares them to see the price go down. There's a difference between volatility and risk. If they had a clear understanding of their overall investment strategy and saw that even with some volatility, they could safely accelerate the growth of their money, they could get their money working much harder for them. So this lack of financial education costs investors a lot of money. So if you're ready to get your investment strategy dialed in, I highly recommend attending that Financial Freedom 101 event that I mentioned, because we'll do a deep dive on investment strategy and you'll learn how to get triple the return of the average investor. Remember, you can get a full scholarship to that event at financialfreedom101online.com. Now, let's say you're already financially free, where your passive income is more than your expenses, or you're on track to get there and you'd like to put your tax refund towards knocking out any remaining debt you might have, like the mortgage on your house, or helping fund your kids or grandkids' education. This is a great time to do that. And if you have all of that covered, then the smartest way to use your tax refund is whatever brings you the most joy. I mean, at this point, you've done an amazing job of creating wealth and financial freedom. So if you want to go on a cruise or have dinner at a 3 Michelin star restaurant like the French Laundry, or give it all to people or causes that you want to support, go for it. Since you've made it this far, if you found this helpful, please tap the like button on this video if you haven't already done that, because it helps me reach more people with this message. And it also helps if you comment on this video. I'm especially curious about what other topics you'd like to see me make videos on. And if you'd like to see more videos from me around personal finance, saving and investing, financial freedom, then make sure to subscribe to this channel and click the little notification bell so you see when I make a new video. Thanks for watching.